Hello and welcome to the BlockSolid Podcast, where we talk about the evolution of the property market, the newest technologies that enhance and revolutionize the world of real estate as we know it, and how we, the owners, the buyers, the renters, the investors, the technologists, and the entrepreneurs can benefit from it all. I'm Yael Tamar, CEO and co-founder of SolidBlock, pioneer in real estate tokenization, and I'd like to welcome my friend Richard Johnson to this podcast. I'm very excited to speak to you today, Richard. How are you doing?
Yeah, good to see you again.
Good to see you too. So Richard is the CEO of Texture Capital, a U.S. broker-dealer, revolutionizing issuance and trading of digital securities with blockchain and smart contract. And Richard here is at the forefront of transforming the market structure through security tokens. And I know you guys have been on this market since 2019. We've been at it, back and forth, kind of updating each other for a while. Tell me, what has changed since then? We're now 4 years into it. What do you see in the market now that you haven't seen in the beginning?
Yeah, well, just to point out, of those 4 years, we did have to spend about 2 of them, the first 18 months of them getting licensed and regulated by the US regulators, SEC and FINRA. So that's a necessary hurdle we all have to jump through, because what we're doing is we're much more regulated than traditional crypto markets. So we need to get the appropriate licenses to do these types of transactions. What we do is we help clients issue security tokens representing equity, debt, royalties, revenue share, any type of real estate. And we have an ATS, alternative trading system, for secondary trading. So what we've been doing recently, so we've spoken a number of times, as you said, about the real estate. It is one of the, I'd say, fastest moving segments within the whole tokenization space. But in fact, I know it's the fastest and the biggest. But lots of other areas people are looking at as well, whether it's private credit, private equity. And what we decided to do about 6 or 7 months ago, is kind of open up our technology architectures, be very kind of white labelable, open API access. So we're now offering that to any sponsor, which it could be SolidBlock, it could be anyone else who wants to launch their own tokenized marketplace. Where you can own the user experience and the expertise around the asset class, and we make sure everything stays compliant and do everything from the background, including kind of onboarding, KYC, AML, helping with the tokenization process, making sure we're doing all the right regulatory reporting and so forth. So that's we're excited about this new initiative because it allows us to kind of address, we're more focused, I guess, on kind of digital securities market infrastructure, and allows us to address all the different asset classes that are out there, which we feel are going to go on chain at some point.
Very cool. Well, it's very exciting that you guys are, have this technical backbone, and yet you also have all these complex licenses. So as far as I understand, there is a special type of secondary market license that you guys had to get, right?
Yeah, it's a little bit different in the US. You go in there with a business plan, and that's what the regulators basically need to approve, as opposed to being license A, B, or C, or whatever like that. But yeah, there's only about 10 or 11 of us in the US who have these specific digital securities licenses.
Yeah. And why do you think the regulator is so specific about digital securities in this case? Like, is it more complex? Are the transactions more complex? Are they less understood? Why do you think that they needed to single out this aspect?
Well, because of the close proximity to crypto is the obvious reason. And since we started, I'd say regulatory friendliness towards the space, which wasn't particularly friendly at the beginning, has got a lot worse, a lot more hostile. So we think it's probably even hard, even when you're trying to do everything by the book like we are. It's got a lot hard. I mean, I'll tell you a little bit about our kind of genesis story. It was in 2018 when the ICOs were blowing up. You may recall, or you may not, I don't know, Jay Clayton, who was the SEC chairman at the time, came out and said every ICO is a security and these platforms need to be regulated. So that was kind of our light bulb moment and our call to arms. And we've always been focused on doing things the right way, going in the front door to the regulators, asking for permission, not forgiveness, and so forth. But unfortunately, and I think there was a big turn last year with the FTX collapse, that everything's kind of getting painted with the same brush, or at least that's a concern that I have. It certainly seems that it's definitely more challenging, even when you're doing everything the right way, to prove that everything's being done the right way.
Oh, for sure. It's interesting to me. Around that time, I was working on as a marketing strategist on a couple of ICOs coming out of Israel. And, most of them actually have been kind of big and successful. And, as the market has cooled off for that, I was doing these smaller podcasts or webcasts or whatever. And I remember specifically, and it's probably somewhere on YouTube, talking about back then how all the large exchanges like Coinbase and Kraken and all the rest have acquired companies that can facilitate secondary markets for securities. And at that point, it was still different from what you're explaining right now, like in terms of digital securities or digital assets, special purpose. But I noticed back then, and I kind of went through this registers of, M&A and what they acquired. And to me, it was a no-brainer. Like, wow, they're going to go into this space now because most of them have the tools to actually provide secondary trading for securities. And then they still didn't. And they, now they're, basically in this nonstop kind of quarrel with the back and forth with the SEC. And it seems like they still choose not to adopt this compliance secondary market listing for securities. Do you have any words of wisdom, like of what's going on and why is it that complex, or maybe they just want to do it differently, access a different market segment or whatever?
Yeah, I mean, I think, there's limitations to what we can do. So, for example, we can't trade, Bitcoin, or in fact, we can't trade any other crypto assets, pure crypto assets, as it were, because not only is there a requirement of the intermediary, like Texture or one of these crypto exchanges, but there's a regulatory requirement for the issuers to either file a registration statement or use an exemption. And as these are kind of decentralized projects without, this is something you can argue about, but whether they have a management team or an issuer or kind of even a corporate structure, typically they don't. They're kind of crowdsourced, decentralized type products, and none of them are. There's been some actions forcing some folks to register securities, but in general, none of them are treated as securities. So for that reason, we could trade them. And I think that's what people want a resolution to, is they want to trade the assets like, Solana, Ethereum, Maker, Compound, whatever it is.
Well, those, for the most part, so for the most part, those, for most of them, there is kind of no argument right now whether or not they're securities. I mean, there's, of course, the big case of XRP, but then there are segments or of the market that they're using, which are securities like tokenized stocks and things like that, that they're still, I would think that they could trade crypto and other things on their regular exchange with a regular license, and then push something, even get, Texture Capital's white label solution, call it, Coinbase powered by Texture Capital, and put those securities there, do it that way. So I wonder why that's not happening.
There's a huge opportunity there, Yael. You look at, Citi came out recently saying that they expect 4 to 5 trillion of assets to be tokenized by 2030. They call it the killer use case. Wow. The BCG and the World Economic Forum had a similar study saying that it was a $16 or $17 trillion business opportunity. Wow. It's a massive use case. My background before Texture was in traditional capital markets. I'm a bit of a market structure nerd. I worked in a bunch of different trading desks. I know how markets work, and I spent a lot of my time in very liquid markets. But there's all these other asset classes that aren't public US equities that are much less liquid, and we can add a lot of benefit by using blockchain as the kind of the backbone of the new market structure there. So all these kind of, I think public equities will be the last to move on chain, but all the other asset classes will move on chain. There's a huge opportunity there just for the existing ones. And then I think there's also an opportunity for kind of, developing new types of asset classes and making it more kind of accessible to everyday investors. So yeah, I think there's a fight being had over the regulatory status of crypto, but in the meantime, there's this huge opportunity that, like you said, a lot of the kind of incumbent players should be looking at.
Yeah, for sure. Like, I think that a lot of times we're kind of engaged into this kind of back and forth and inside a box. And let's, think outside the box. How do we make it palatable? Because it's not only about kind of putting regulators into their place, which I'm all for, but on the other hand, they do have a function in a society. It's also about kind of making these products accessible to users that expect certain level of compliance. So on the one hand, there's retail users and maybe high net worth that normally don't have access to these institutional products that we make available, all these great projects that they can invest in directly instead of, say, buy a public REIT, a stock and stuff like that. But on the other hand, there is a huge market of institutional buyers and let's say Citibank's clients, who do they sell to? They have a whole bunch of they have brokers that sell, I'm assuming broker dealers that sell to their clients, family offices and small institutions and pension funds and stuff like that. So they're not going to buy from a non-compliant or what's considered non-compliant resource. And so I think that you're onto something big, and with being able to distribute things compliantly to kind of these markets.
Yeah, I think another thing is when you look at again what's happening in crypto volumes are down massively right now. A lot of people are burnt. I mean, a lot of people have lost money, frankly, and I guess there's a little bit of fun betting on kind of what's the next meme coin that looks like a dog or something like that for a while. But then that party is over right now. So the question is, are those retail investors who got brought into investing, maybe some of them made some money, some of them lost some money. It's extremely volatile, obviously. But we're offering products that are more regulated, are often based, backed by real world assets, have an income stream or some other kind of revenue model or whatever, and they're offering 10% returns or 10% yield or 15% returns, something like that, which could be great returns for a portfolio. Now, you're not going to get to the moon 10,000x or whatever from most security tokens out there, but for most people, it's probably a better risk reward trade-off in their portfolio.
Yeah, exactly. And of course, in order for us to get to the place where somebody will have a portfolio, there needs to be an availability of products and assets. So do you think that real estate is still going to be kind of the backbone, or are we going to see a little more of this, a little more of that? And, what is the perfect product to tokenize?
No, the perfect product. I think it's pretty broad. I mean, we actually did a study recently looking at that. And some of the things that were coming up is, I think, private equity's got a lot of focus. I think that's going to be a tougher one. Private company securities, definitely that's something we've looked at. That's a huge space right now. But also we're seeing, with rates where they are, tokenized money market funds or things like that, yielding assets. Nice. Where you can put your stable coins. I think stable coins you can earn about 2% yield in some of the DeFi protocols. With the money market fund, you can earn more like 5%. So that's a trend we're seeing right now as well. But really, it runs the gamut. Yeah.
So you guys have an infrastructure to be able to incorporate some of that, either stable coins or protocols that do that, or not?
Yes and no, I think. Yeah, we're looking to, a lot of times it's going to be up to the issuer because we're not the issuer of the assets.
Yeah.
So we're looking at ways that, we've always looked at a lot of the innovation in DeFi and trying to bring it into kind of the regulated market sense. And once you do that, it's not going to look exactly the same, but, because there's other types of rules you need to follow.
Yeah.
We think we're going to be bringing to market a product fairly soon with very similar characteristics, a lot of what you see out there.
It kind of reminds me of these products that we saw at GBTC and that are basically funds or mutual funds or whatever they were that followed or synthetic products that followed Bitcoin movement or funds, right? So it's kind of similar, but they're following a mutual fund, or sorry, they're following basically some sort of a yield farming or stablecoin fund that's giving 5% return. So that's kind of what you are. And you guys are gonna, or the issuer is gonna earn on the spread, right? So they're gonna give
It depends. Yeah, it kind of depends. So, yeah, typically, you're right. Yes, yeah, yeah. It's actually kind of the other way around from the BTC products. Those like exchange listed products for Bitcoin, they're basically doing it the other way around. They're taking a digital product, digital coin, and turning it into something that worked the old way. We're trying to do it the other way around. We're taking traditional assets and putting them on chain.
Oh, so these are traditional funds that are giving 5%. Oh, okay, got it. Okay, well, that's easy enough for people to understand, right? So they're making them available because otherwise these are available only to ultra high net worth or institutions, and a very limited number of those, right? So, and now you can actually buy a piece of that for, let's say, $1,000 or $5,000, $10,000 instead of millions.
Yeah,
right?
well, that depends. So, like I said, we're still following the regulations here. So, so if you're following Reg D, that's an exemption you can use for accredited investors. So you still need high net worth for that one. But seeing a lot more people using Reg A and Reg CF exemptions, which are both part of the, I think it's 2014 Jobs Act, the crowdfunding regulation around that. They allow retail investors to participate in private company, private offerings, or I guess they're kind of semi-private at this point. But that's another very hot area we see, particularly around fractional marketplaces. Where you're talking about get exposure for $500 or whatever it is.
Yeah, exactly. So yeah, that's going to be super interesting, I think, in the future that, there is definitely a trend that we see where individuals want to have control over their capital. And in the US, you have definitely a lot more than in other countries where you can actually select kind of where your 401k or mutual fund, pension fund money is going. And, interestingly enough, you can even put it towards similar investments such as these, right? And so that's super exciting to me that, individuals, especially those that are kind of skeptical about others, others holding on to their assets and choosing the investment products, and everybody kind of wants to go with their own ethics and their own taste in products, and they're aware of management fees and inflation. It seems like the newer generations are kind of more aware, have higher financial IQ, except of course the whole cohort that went in and invested in everything in crypto, and or maybe I'm wrong about that. But anyway, so what I'm getting at is, it seems like now you guys and everybody else in the industry that caters to basically investors that are a little more aware than, let's say, the average investor on Interactive Brokers or on Robinhood, and are maybe a little more looking into what kind of yields the project offer, like what is the product memorandum, PPM, what is the private placement memorandum says, and what is the data and things like that. Do you think that that's the case, kind of, or how does the investor that goes on some of your issuers platforms compare to an average, let's say, stock market investor?
I'd say to the average, probably a little bit more sophisticated, because you have to bear in mind that these are potentially more risky investments, even real estate. You've got to know a little bit about what you're doing. We wouldn't take on, for example, if you've got a low risk tolerance, or like a retired person or a modest pension or something like that, probably not the best thing to be investing in is kind of complex real estate products or private companies that there's no, you're better off maybe one of those target date funds or something more stable. So I'd say in general, there is a slightly higher risk profile to what we're offering than typical stock market investors, but at the same time much lower than what's happening than the crypto market. So somewhat more sophisticated investor, I'd say. Yeah,
very cool. So Richard, tell me, what else are you guys planning that you might want to share, and or just general about trends and really interesting things you see?
Yeah. I want to give you an example of one client we're working with right now, just to kind of show you kind of what we're doing with tokenization. They offer a product called home equity investments. I'm not sure if you're familiar. I don't think you have it in Israel. I know you don't have it in many parts of Europe.
We kind of, so, I mean, home equity investment, yeah, we do have. We have, it was super popular. There were so many, so many funds that used to deal with that. But in Israel, in fact, a lot of people, have mortgage and they refinance. So they kind of never almost have a situation where they've paid off their home, but some do, yeah.
Well, let's make sure we're talking about the same thing. It's similar, but you can still have a mortgage. Let's say somebody has a $1 million home with a $500,000 mortgage or something.
Yeah.
They could still sell $100,000 of that excess equity, and in this kind of high rate environment, that may be preferable to a HELOC. So this kind of space is fairly new, less than 10 years old. But it's been very institutional right now, very much an institutional market. And what we're doing with this other company is working to kind of fractionalize and tokenize these investments. They're going to be offering them to a Reg A offering to retail investors. And we're able to do this with the blockchain technology underpinning it all. So I think it's a great example of how we're using the technology and our ATS and our regulatory license and so forth to help bring this, what was an institutional product, to a more retail market.
Got it. That's really cool. So is this is a structured product consisting of home equity loans, or is this actually somebody offering service to homeowners to get them tokenized?
The company is doing both. We're doing just the kind of investment side, but it's individual homes. You can look at by zip code, for example, as opposed to a portfolio, which is another kind of, I guess, advantage of going through the fractionalized route, is that you can build your own portfolio as opposed to having somebody else just build a pool for you. I
love it. And are these rated?
No.
Okay.
Some products in the space are rated, but I don't have the details of that in front of me right now, though.
Cool. Oh, this is really interesting. Yeah, we've thought about the home equity. Yeah, you're right. You could have a primary lender and then still, assign or sell a part of your equities, economic interests to another institution. Yeah, and we have quite a few here in Israel that do that. And it's brilliant. Almost everybody wants to have their home leveraged to the max. So so in Israel, at least, because here we have like some of the highest concentration of loans per person of all kinds. So yeah, this is really cool. And I think that tokenization does offer a lot of new models, like you said, and new possibilities in the market. And we can only imagine what they're going to be. So I'm looking forward to seeing what you guys are up to and catching up with you every once in a while to hear some interesting use cases.
Yeah, absolutely. Keeping in touch here.
Awesome, Richard. Really, really happy to have you here. And you can find us on Spotify, Apple Podcasts, or by visiting the website at solvlog.co/podcast. Check out Texture Capital. And if you enjoyed the show, don't forget to rate and review and spread the word. Thanks.